Imagine it's November 5th, 2024. The air in Manhattan is thick with that electric hum of election night, cocktails clinking in gilded ballrooms, screens flickering with exit polls, and Wall Street's sharpest minds huddled over laptops, hearts pounding like overclocked servers. Donald Trump, the comeback king, is clawing his way back to the White House. And as the networks call Pennsylvania, then Michigan, the markets don't just react, they erupt. This is the birth of the Trump trade. It's not some dry policy wonkery. It's a high-stakes gamble, a collective fever dream where trillions ride on one man's tweets and tariffs. Picture the scene. Hedge fund titans like Ken Griffin at Citadel, whispering into phones about loading up on industrials and financials. BlackRock's Larry Fink, ever the oracle, nods approvingly as algorithms flood the exchanges. By dawn, the S&P 500 has surged 5%, the Dow's up 2,500 points, and Bitcoin's mooning past 80 grand. But this isn't random euphoria. It's a $4 trillion bet, etched in pixels and paper trades. How did we get here? Rewind to the summer of 24. Polls are a knife edge, Harris versus Trump, but the smart money smells deregulation. Trump's playbook: slash corporate taxes to 15%, gut red tape on energy, and slap 60% tariffs on China to bring jobs home. Wall Street loves it. Banks salivate over lighter Dodd-Frank chains. Oil barons dream of Arctic drills. Manufacturers eye a reshored renaissance. Prediction markets like Polymarket explode. $3.2 billion wagered. Whales dumping $30 million chunks on Trump odds, spiking to 65%. It's not just bets, it's positioning. Pension funds pivot, ETFs balloon. By election eve, the Trump basket, think Caterpillar, JP Morgan, Exxon, has outperformed the broader market by 12%. Fast forward to Inauguration Day, January 20th, 2025. Trump's hand on the Bible, promising a golden age. The crowd roars, confetti rains. Markets, they levitate. The S&P cracks 6,000 for the first time, up 8% in a week. Yields on the 10-year Treasury dip to 3.8% as Fed whispers of rate cuts dance in the air. This $4 trillion, it's the phantom fortune conjured from thin air. Market cap gains across sectors betting on policy pixie dust. Industrials add $800 billion. Financials, $1.2 trillion. It's the biggest post-election windfall since '08 recovery bets. But stories like this, they always have a shadow. As champagne toasts echo in the financial district, a grizzled trader named Elena Vasquez, let's call her our canary in the coal mine, stares at her Bloomberg terminal. She's seen booms before. .com, housing bubble. This feels too easy, she mutters, eyeing the VIX at 12, sleepy as a summer afternoon. Little does she know, the real party's just starting, and the hangover's brewing across the Pacific, where Beijing's already plotting countermeasures. Wall Street's all in, blind to the fine print. Tax cuts juice earnings, sure, short term. But tariffs, that's the Trojan horse. By spring, as Trump's team rolls out the first waves, 25% on Mexican autos, 10% universal, supply chains groan. Yet the street shrugs. Growth will pay for it, they chant, as Apple stock hits 250, buoyed by America First hype. Elena buys a dip in semiconductors, whispering to her intern, "Kid, this trade's got legs. For now." And so the saga unfolds. A city of glass towers, fueled by greed and grit, bets the farm on a sequel to 16's Miracle. But miracles, they demand sacrifice. As 2025 blooms, the vines twist tighter. Spring 2025. Washington's cherry blossoms are in full riot, but the real fireworks are in the Rose Garden. Trump's first 100 days, a blitzkrieg of executive orders. Corporate tax rate? Slashed to 15% with deductions for U.S.-made goods. EPA regs? Vaporized for fossil fuels. And the tariffs. Oh, the tariffs. April 2nd, he signs the Reciprocal Trade Act, mirroring every foreign duty dollar for dollar. China gets hit with 60% on electronics, Europe 20% on steel. Fairness for American workers, he booms to adoring crowds. Wall Street? Ecstatic. The bet's paying off. Enter our hero villain, Marcus Hale, a 42-year-old quant at a midtown powerhouse. Fresh off a Harvard quant PhD, he's the architect of the Trump ETF, TRMP, ticker symbol a wink and a nod. It launches March 15th, weighted heavy on banks, builders, and big oil. By May, assets under management top $50 billion. Marcus's screens glow green, S&P at 6,400, up 15% year to date. This is structural, he tells CNBC, tie askew, eyes alight. Deregulation adds 2% to GDP, tariffs force capex home. His firm's bonus pool swells, yachts bob in the Hamptons. The $4 trillion infusion manifests everywhere. Financials balloon as Volcker-era shackles loosen. JP Morgan's shares leap 25%, trading at 14x earnings. Energy? ExxonMobil merges with a Permian driller, stock doubling to $140. Even tech pivots. Tesla's Musk, Trump's golf buddy, announces a Texas gigafactory expansion, EV credits intact. Market cap. That's the bet's ledger. $1.5 trillion in banks, $900 billion in materials, $1.6 trillion sprinkled across the rest. It's not leverage, it's liquidity on steroids, courtesy of a Fed pausing hikes at 4.25%, but weave in the whispers. Down in the trading pits, Elena Vasquez clocks anomalies, import data lags, Walmart warns of price hikes on TVs. Tariffs aren't free, she blogs anonymously. Yet the narrative steamrolls. Summer rallies, Dow kisses 45,000, yield steady at 4%, inflation ticking to 2.8%, transitory, economists coo. Marcus throws a rooftop bash July 4th, fireworks mirroring his P&L. To the golden age! Glasses clink, interns snap selfies with Fox anchors. Reality nibbles at the edges. August. Beijing retaliates, dumping $200 billion in U.S. ag bonds. Soybean futures crater. Farmers in Iowa howl. Trump tweets, weak China. And miraculously, markets shrug, buoyed by a NAFTA 2.0 reboot with Mexico. But Elena's radar pings. Corporate debt issuance spikes 30%, firms borrowing to front-run duties. They're papering over cracks, she tells a skeptical lunch crowd. By fall, the trade's a legend. Pension funds allocate 10%. Retail floods Robinhood with TRMP shares. S&P hit 6,034 in October, all-time highs. Marcus? Up 40% on performance fees, eyeing a Tribeca loft. The bet's not just money, it's myth. Wall Street is alchemist, turning policy into gold. Yet autumn leaves fall, and with them, subtle shifts. CPI jumps to 3.2%. Powell hints at vigilance. Elena stocks her bunker with canned goods, metaphorically. Bubbles burst in winter, she muses. As Thanksgiving nears, toasts abound. But stories demand tension. The vine's overgrown. Roots strain against policy soil turned sour. Little do they know, 2026's frost is coming. November 2025. The holiday lights twinkle on Fifth Avenue, but the mood in boardrooms is frost-kissed. Trump's tariffs, once champagne toasts, now taste like bitters. That April executive order, it's a hydra. 25% on autos from everywhere but allies, 15% on consumer goods. Compliance, a nightmare. CEOs burn millions on lawyers, supply chains snarl like rush hour I-95. And inflation? It's the uninvited guest, spiking groceries 12%, gas to $4.20 a gallon. Our tale's tension coils around Elena Vasquez. No longer whispering she's shorting the Trump basket via options, her desk a war room of charts. Look at the data, she urges a room of suits at a quant conference. S&P's flat since January, 6,734 today, same as July. The $4 trillion bet? Eroding. Financials shed $300 billion in cap as loan defaults tick up from tariff squeezes. Industrials? Caterpillar warns earnings miss, shares down 18%. Policies promised growth, Elena says, voice steady, but delivered drag. Flash to Marcus Hale. His TRMP ETF, bleeding 8% quarterly. He's pivoting, dumping steel for pharma, but the street's turning. Yields climb to 4.125% on the 10-year. Fed's hawkish pivot as CPI hits 3.5%. Inflation's the tax we forgot, a Goldman note admits. Trump's response? More bluster. November 14th, he rolls back food tariffs, beef, coffee, bananas exempt, to soothe midterm jitters. Prices dip 2%, but it's triage. Reuters calls it retreat amid revolt. Politico details CEO fury over $1,200 household hits. The crack's spiderweb. April's crash, Wikipedia's got a page now, saw global bourses plunge 10% on tariff shock. VIX spiked to 35. Elena covered shorts for a 200% gain. Recovery? Anemic. By summer, reshoring hype fades. Foxconn bails on Wisconsin. Tesla delays. Beijing's countermeasures? Soy exports halved, adding $88 billion in farm bailouts. Economy grows 1.8%, below Fed's 2.5% dream. Wall Street's bet unravels thread by thread. $4 trillion peak, now $3.2 trillion per Bloomberg tallies. Personal stakes rise. Marcus faces redemption calls, his firm's clawing bonuses. At a dimly lit bar, he corners Elena. You called it wrong. Tax cuts juiced Q2 GDP. She sips her scotch, calm. Juiced? Then junked. Tariffs aren't multipliers, they're multipliers of pain. Data backs her. Tax Foundation pegs $163 billion revenue bump, but at 0.54% GDP cost. Households pinch. Walmart hikes jeans 15%, Starbucks lattes 10%. Midterms loom, polls show Rust Belt flip. Yet denial lingers. Trump's Treasury chief, Scott Bessent, touts Main Street gains in speeches. S&P wobbles at 6,700. Bitcoin dips below 70K on China crypto bans. Elena's blog goes viral. The trade's midway, hubris meets hurdles. Marcus reads it, gut twisting. Winter whispers of recession. Powell's November FOMC, vigilance required. As snow dusts Central Park, the narrative pivots. The golden rush? Tarnished. Bets placed in 24's dawn now falter in 25's dusk. But the real storm? It's 2026's shadow, creeping. January 2026. New Year's confetti's swept away, but the real cleanup's just beginning. Trump's second year dawns with a whimper. Approval at 42%. Midterms a bloodbath for GOP. The Trump trade? It's not dying. It's dead. A $4 trillion corpse picked clean by vultures. Wall Street awakens to the autopsy. Policies that promised paradise delivered purgatory. Cue the collapse. February, China escalates, dumping treasuries. Yields rocket to 4.8%. Mortgages spike to 7%. S&P craters 15% in a week. TRMP ETF delisted amid outflows. Marcus Hale? Margin call at dawn, his lofts foreclosed by March. We bet on the man, not the math, he confesses to a podcaster, voice hollow. Elena? Vindicated. Her fund up 150%. But triumph tastes bittersweet. Pink slips everywhere. Her old firm shuddered. The unraveling's a cascade. Tariffs, meant to fortify, fracture, $200 billion in retaliatory duties from EU, Mexico. Inflation? 4.2%. Fed hikes to 5%. GDP contracts 0.5%. Q1. Unemployment ticks to 4.8%. That $4 trillion bet? Evaporated. Market cap down $3.8 trillion from peak per Fed flows. Banks hoard. Credit freezes. Trump's fix? More tariffs, then rollbacks. A flip-flop frenzy eroding credibility. April. Trade War 2.0 headlines. Global recession odds at 70%. Stories need reckoning. Elena testifies to Congress, charts in hand. Wall Street's sin was selective amnesia. We ignored history, Smoot-Hawley echoes, and chased the narrative. Marcus, humbled, starts a newsletter. Lessons from the fall. Key takeaways? Policies aren't panaceas. Tax cuts fueled deficits to 8% GDP. Tariffs, a $2,300 household sting. Reshoring, spotty. Jobs up 200K, but automation eats half. By summer, glimmers. Powell cuts rates. Trump pivots to deals, inking a USMCA refresh. S&P stabilizes at 5,200. Yields ease to 4.2%. But scars linger. Retail bankruptcies. 401Ks slashed 20%. The bet's epitaph? Hubris. Wall Street learned. Elections swing. but economics bites back. Elena, overlooking a quieter Hudson, muses, "Markets are stories we tell ourselves until reality edits." And so, the Trump trade fades to footnote. A cautionary tale for quants and kings. Bets win races, but gravity grounds them. In finance's endless cycle, today's collapse seeds tomorrow's comeback. But for now, the street licks wounds, wiser, or at least warier.